you had an interesting statistic, and I'm just going to let you tell it. But as far as the market correction, and as far as I'm just going to shut up. You have a market correction statistic. Just give it to us.
Yeah. So the markets, the S&P 500 has not corrected more than 5% in nearly 200 days. I was not able to find how long it's been since we've seen a streak like that, but it's still pretty significant. And there's some people, I guess, and in fact, Fat Man Zoom, to add on to that, it's double what the average is. So usually on average, about every 100 days or so, we'll see a 5% correction in the market, particularly the S&P 500. We have not seen that. Today maybe is a spark that could create a little bit of a correction. We'll see. We're only down about 1%, maybe a little bit lower than that today. We saw the Dow actually go down around 400 or 500 points at one point this afternoon. So we'll see where that actually ends up shaking out. But yeah, it's very interesting. And I think it leads to a lot of questions. You know, is there a correction that's going to be happening? Are we experiencing that today? Is that the start of the correction? Should people not be buying the dip here? And so that's kind of where I wanted to lead the conversation. It's interesting because we look at a lot of people look towards the IWM, which is the Russell 2000 ETF. It's the equivalent to SPY as to S&P 500. And we look at the chart here, and it's actually been getting hammered quite a lot. I mean, from its highs around 234.50 back in March, really, it hasn't really outperformed or done well since. And so this is interesting. We're right now retesting the 200-day moving average. And so this is certainly could be classified as a correction, but we look at the SPY, for example, and we're not quite there yet. There is room for this to come down still. And so there's definitely a case in which you could say, you know what, every time we've seen a correction, it's come down and retested the 50-day. So what if it happens this time? And there's potential for the S&P 500 to maybe retest 433, or the SPY to retest 433, which would be around 43. 300 for the S&P 500. And so this is interesting. And so how do we do this? How do we navigate through a potential correction that might be happening here? And what are your thoughts in general? Are we going to be experiencing a correction? Not necessarily getting you to just call out a prediction, but what would be your plan if indeed this is what was happening right now?
Yeah, I mean, I think I'm a law of averages guy, and it feels like the likelihood of a correction is likely.
Yeah.
And it wouldn't be surprising. However, I also know that it's a fool's game to try to predict what the market's going to do. And, it's fun for us to make predictions on here, but I think that in anticipation of a run or a potential correction, rather than trying to time it just make sure I want to make sure that I have some cash on hand, and also in things that I trust that if they go down, I can buy more of, because if the overall market goes down, is most likely that my portfolio will go down at a greater rate than the market. So I want to be prepared, and I want to view that as an opportunity. Today was a hella red day. Now, I know some Chaos Group people that said they bought some dip on some things. It could be another red day tomorrow. It could be a red, September, all those things. But to me, there's been a lot of choppiness throughout the year. And just rather than trying to figure out when the days come or freak out about when the day's going to come, just make sure that you look at your portfolio and make sure that your portfolio is well diversified. I talked about this. I felt like I was a little too heavy spec. I paid for it. It was a gut punch. And I was also in things that I wasn't confident in averaging down on. I was more doing a flyer. So I went away from my strategy a little bit last week, and I just needed to tighten it up. So I'm glad I did before today, but trying to time the market is just a really dangerous game. And obviously you want to use technicals to get a good entry and to round out your strategy. But if you paint that as gospel, you're stuck in confirmation bias.
Yeah.
And you're going to get yourself in trouble. So those are all things to consider as far as the portfolio is concerned.
Yeah, I agree. Don was adding here. I think he ended up grabbing the streak. He said it's been over a decade. He thinks. I think he might be right on that. As far as I think it's 2010 was the last time we saw a streak like this, and there was a pretty sharp correction. And if this plays out the same way it did in 2010, then to your point, this would be the worst time to sell. And what usually ends up happening, especially to the retail investor, they get a little panicky. They sell into something like this, and then they end up buying higher than what they sold it for. And so it's just it destroys any kind of wealth building opportunities. And so you either just do nothing or find areas of opportunity to add to. I think selling here, in my opinion, in our experience, has really been the worst possible time to do so is when everything's red.
Yeah. So we have a video on the the Perfect Portfolio. Make sure you guys check that out. It's sort of like, what does a well-balanced portfolio look like? What does the exposure need to be in? And then you level 3 folks, you see every Wednesday, I pretty much go through analyzing my portfolio, making sure my position ratio is on point, the amount of positions I have, because it's constant. You have to continue to revisit your portfolio.
Yeah.
All interesting stuff. Guys, let us know what your strategy is, what you think is going to happen as far as the market, and how you're preparing yourself either way, because if it does run, you still want to be a part of that. We see stocks at all-time highs, so should be interesting.